Moody's just downgraded America's credit rating after markets closed Friday. This triggered a massive spike in U.S. Treasury yields once futures opened Sunday. The result was brutal, over $1 billion in crypto liquidations affecting 157 traders. But here's what's crazy. This might actually create the perfect buy the dip opportunity for Bitcoin instead of the market collapse everyone fears. Let's talk about what's really happening with the US debt. The government's debt to GDP ratio has crossed 120%. In simple terms, we owe more than we produce in an entire year. Definitely not good. This forces some tough choices like raising taxes / spending or just printing more money. And pay attention to that last one because I'm going to explain it later. None of these options are particularly pleasant for the economy. Take Japan as a warning sign. Their debt is a staggering 260% of GDP. Definitely no bueno. Their prime minister openly admits the situation is worse than Greece during their financial crisis. And you know Greece, it was in a great position. But here's where it gets interesting for crypto investors. When major economies stumble, the effects spread like wildfire. Moody's downgrades didn't happen in isolation. It sent Treasury yields soaring as soon as the markets reopened. Think of it like dominoes. When the US debt get questions, everyone reassess risk globally. And if I'm an investor and the US is paying me 5% for the debt, well, other countries are going to do the same, spiking their rates. That way, me as an investor, I'm thinking about taking my money from the US and putting it in other countries. That's why other countries' bonds are being repriced right now, creating a chain reaction across the markets. It's like watching financial contagion spread in real time, affecting everything from mortgage rates to your crypto portfolio. And yet, this moment of panic might be precisely when the opportunity knocks. Sure, everyone's freaking out, but the US has weathered these storms before. Global investors still prefer the US because either you like it or not, we have the reserve currency. Treasuries, despite the drama, they're simply too big and liquid to ignore. The government has powerful tools at its disposal too. And what happens if I have a debt and nobody wants to buy it? Well, simple. I buy my own debt. That's why the Treasury or Fed could start buying their own debt to push yield back down. But this can weaken the dollar. And a weaker dollar might actually propel Bitcoin upwards alongside gold and other assets. A lot of people are also talking about the golden cross that is forming in Bitcoin. And historically, this is a bullish sign. While others panic, smart money sees the pattern beneath the chaos. The last time Treasury yields spiked this dramatically, Bitcoin entered its most explosive bull run in history. But with institutional players now dominating the market, will history repeat itself, or are we witnessing something entirely new? Honestly, I think it will repeat the same pattern, but it will 10x thanks to institutions. Let me know what you think.